Welcome to Confidently Crypto with Dr. Tonya. I'm your host, Dr. Tonya M. Evans, law professor, author, fintech educator, and your trusted chief learning optimizer. I'm here each week to help you navigate the transformative world of crypto, blockchain, and decentralized finance. And each week we explore how these technologies are reshaping the way we build wealth, create opportunities, and to challenge traditional notions of financial systems. Whether you're crypto curious, a cautious skeptic, or already diving into the Web3 economy, this podcast is your safe space to learn, to grow, and to thrive. Now, today we're diving in deeply into one of the most fundamental yet overlooked questions. What is money, really? It's something we use every day, but how often do we stop to think about what gives it value, how it works, and why it's changing? So, we'll discuss the origins and evolutions of money and the flaws in the current system, and also how crypto and Bitcoin in particular represents the next phase in financial innovation. And by the end of this episode, you'll have a clearer understanding of why crypto matters and how it fits into your financial future. So, if you're ready to grow, let's go. So let's start with the basics. And I like to begin at the beginning in order to fully appreciate why uh, Bitcoin back in January of 2009 was an important alternative to the existing financial system. We have to start with the basics. And what is money really? So, if I asked you to pull out your wallet right now, what would you find? Paper bills, coins, a credit card or three, maybe even right next to it or connected to your wallet, you have your phone. So you'll have apps like Venmo or Cash App. And most of us think as of these things as money. But they're actually just tools for representing money, for moving representations of value from one record, also known as a ledger, to another. The essence of money, however, is much deeper. Money at its core is a tool. It's a system that we agree on collectively to facilitate the exchange of value. And historically, humans have used all kinds of things as money, from bartering goods like commodities like grain, livestock, to commodity money like gold or silver. But as societies grew and started to trade outside of their trusted communities, we needed something more efficient, something that was more standardized. And so fiat currency, which is paper money that is backed by governments, became the standard. In the United States, the dollar was once tied to physical gold or backed by gold, but that hasn't been the case for decades. And since 1971, it's been purely fiat, government issued currency based on what? The full faith and credit of the government. And that means the value isn't backed by a tangible asset. Instead, it relies entirely on trust in government, trust in the government that actually issues it. So the story of money is really the story of evolution. And as societies change, so do our financial systems. And what worked in one era just may not work in the next. And as we move deeper into the digital age, cryptocurrency is emerging as the next step in that evolution. So the next logical question is, if fiat currency is today's standard, what's the problem? Why do we need something like cryptocurrency? And there are four major flaws that crypto enthusiasts point to in our current financial system. One, and it's something that is on everyone's mind here, not only in the United States, but around the world, inflation. Inflation erodes the purchasing power of money over time. If you've noticed that your grocery bill or gas has skyrocketed in the last few years, that's inflation and, of course, corporate greed in the midst of epic profits for them and their shareholders. But that's a story for another episode. But all of those things are at work. Governments print more money to stimulate economies. So think of crises, think war and crises like a pandemic. But printing more money devalues the money that's already in circulation. In fact, Alan Greenspan is famous for saying that the United States will ultimately never default on its debt. No matter the saber rattling and the fights on the Hill, we'll never default on debt because, and I quote, we can always print more money. So I guess that's great for stimulating the economy, but it's terrible for amassing, growing, and transferring wealth from one generation to the next. The second, after inflation, is a lack of access. So globally, over 1.4 billion people, billion with a B, are unbanked. And certainly there are millions that are underbanked as well, meaning they don't have access to a bank account or to significant financial services, and that's clearly a problem. For these individuals, traditional systems are either inaccessible or absolutely unaffordable. Three would be fees in the middle people. So every time you swipe a card or send a wire transfer or pay a bill online, intermediaries take a cut. They are extracting a premium for the benefit of relying on them for their trusted role in exchanging value. But these fees disproportionately impact those with lower incomes. Four is centralized control. So banks and governments hold immense power over the financial system. Remember the 2008 financial crisis? The reckless behavior by banks led to a global collapse, and everyday people paid the price. Some are even still paying it to this day. So, transitioning to Bitcoin, it enters the scene with a gangster lean in 2009, January of 2009. Bitcoin as a protocol, meaning a software that was capable of empowering people to transfer value directly with each other without having to rely on a bank, a government, or some other intermediary that was extracting a premium without giving the same amount of value for the service. So Satoshi Nakamoto launches Bitcoin in 2009. Satoshi, whoever he, she, or they are, because we don't know, it's a pseudonymous character, recognized the flaws in the system around the world and envisioned a global system that didn't rely on borders or governments or banks, one that empowered individuals to transact directly but also securely. So in October 2008, during one of the worst financial crises in modern history, Satoshi released a white paper entitled Bitcoin, a peer-to-peer electronic cash system. And the timing wasn't accidental. And I also encourage you to find the Satoshi white paper and read it. 9 pages, 7 footnotes. It is brilliant in its simplicity. It is a little wonky and technical, but I encourage you to read it and just become familiar with the original plan and conception for Bitcoin. And as I said, the timing wasn't accidental because trust in banks and the banking system and in governments was at an all-time low. Institutions like Lehman Brothers and Bear Stearns collapsed, wiping out pensions, savings, and livelihoods. And Satoshi's goal was to create a system that couldn't be corrupted or controlled or destroyed, at least not by a single entity. So Bitcoin runs on a technology called blockchain. Satoshi didn't actually refer to the term blockchain in the white paper, but essentially a blockchain is it's like a shared online notebook or record where every transaction and balance is time-stamped and recorded. And the notebook isn't kept by one person or one company, but it's shared across many computers all over the world, making it decentralized. You don't have to run the Bitcoin software in order to participate and benefit from peer-to-peer exchange of money, but it is a system that allows for software, the same software run all around the world, to have rules of transparency, rules of transactional data, and either I have a Bitcoin or I don't. Either I have a token that I'm exchanging for Bitcoin or I don't. And it's simplistic, but also extremely complex, all in one. It's very fascinating. And in episodes to follow, we'll be diving more deeply into how the system works if you're interested. But at a high level, blockchains solve a big problem. There's not just one, there are numerous, probably thousands, hundreds, if not thousands at this point. But blockchain solves a big problem with digital money. How to prevent someone from spending the same coin or token twice. That's called double spending. An analog analogy back in the day for the Gen Xers and boomers who are listening or watching on YouTube, you could have only $1,000 in the bank. And if I write a check for $1,000 to Mary and also to Steve, but I only have $1,000, the first one to actually cash that check wins. That's not a great system for money and protecting the value of currency, right? So the idea of digital money seemed, abstract and risky, but the way that blockchains work, it makes the system secure and trustworthy because every transaction is permanently recorded. The record can be added to, but not changed or erased. So obviously that makes it really secure. And since anyone with an internet connection can use it, Bitcoin is open to people everywhere. Now, full transparency, when I first heard about Bitcoin, I'll be honest, I didn't get it. The idea of digital money seemed completely abstract, certainly risky. But the more that I studied its technology and purpose, the more I saw its potential, not just as an investment. Sometimes people call it a speculative investment, but literally as a tool for financial empowerment, not just to store value, but also as a medium of exchange as well. So the next question or the next place we need to go is to really start to connect the dots. Why is cryptocurrency in particular the next evolution of money? And there are a couple of reasons. I'm going to highlight four in particular. I'll list them first and then say a bit about each. So decentralization, transparency, accessibility, and efficiency. Improving upon the existing system that is centralized, opaque, so far from transparent, often inaccessible to the masses, and horribly friction laden and inefficient. So, first, decentralization. Crypto removes that middle person and it gives individuals direct control over their assets. Think of in the late 90s, early aughts, when folks were using peer-to-peer technology to exchange media files, right? MP3 sharing. I'll use air quotes for those of you who can see me because that is, as an intellectual property professor and lawyer, quite a bit of that was actually copyright infringement. That's a story for another day when we get into kind of the intersection of intellectual property and Web3 in future episodes. But here we're talking about removing the middle person and going from removing the middle person to this idea of transparency, that every transaction is recorded on a public ledger, and that reduces fraud and increases accountability. So decentralization, giving individuals direct control over their assets using peer-to-peer technology in addition to other things, and then to every transaction recorded on a public ledger, reducing fraud and increasing accountability. Third is the accessibility. So anyone, anywhere with a smartphone can participate, and it doesn't need to be connected 24/7 in order to participate. We'll talk in a future episode specifically about the different types of wallets, but at a high level, this is especially impactful for underbanked populations or those who are disconnected or disenfranchised by the existing system. And finally, efficiency. So we've had decentralization, transparency, accessibility, and four, efficiency. Crypto transactions are faster. They're less expensive, far less expensive than traditional methods of money transmission around the world, especially around the world for cross-border payments. So, for example, imagine sending money to a family member overseas with a traditional method. You face delays, you face high fees, and you oftentimes don't have full assurance that it would make it to its intended recipient, depending upon the country and the rules and the laws, the mores of that particular country. But with Bitcoin, it's almost instant and it costs a fraction of the cost of using traditional money senders like a MoneyGram or Western Union, something like that. So if you're ready to explore, now that we have the foundation of money, why Bitcoin in particular, but crypto in general, is yet another means, method, alternative of sending value, exchanging value for goods and services or gifting. One, you got to learn the basics. So read up on blockchain, Bitcoin, cryptocurrency. My book, Digital Money Demystified, will help you navigate and separate fact from fiction and give you a blueprint for starting in a final chapter that helps you go from cash to crypto safely, legally, and confidently. You can certainly visit my website at proftanyaevans.com or also my business at advantageevans.com. Many resources for you to get up and get moving. Go slowly, but make sure that you're moving forward to become familiar with the language of the new economy, what your options are, and what the trusted resources and sites are that you can engage with. And also experiment with a small purchase. Buy a small amount of Bitcoin or Ethereum through a trusted platform like Coinbase. You can certainly buy Bitcoin on Venmo, Cash App, Robinhood, PayPal. While the ultimate point is for you to be your own bank, to manage your own wallet, not one that is provided on an exchange, a centralized exchange. That's actually not the ultimate goal. But I don't want your fear perhaps of setting up your own wallet without fully understanding and appreciate to be the barrier to entry. There is no more middle person. There is no more redlining. There is no more systemic marginalization. The only barrier at this point is your access to knowledge and your ability to lean in, to become intellectually curious and to learn more, so you are far less likely to be taken advantage of. Scammers will take advantage of your lack of knowledge in that quadrant, not only when you know that you don't know, but when you don't know that you don't know. That is a scammer's paradise. So be careful. Also, number 3, secure your assets. Use a wallet to store your crypto safely. Remember, not your keys, not your crypto. So it's not about leaving your crypto on what you consider to be a trusted platform. That didn't work so well for the folks who left their assets on the FTX exchange run by Sam Bankman-Fried, who is now in jail for defrauding people, much in the same way that Lehman Brothers or Bernie Madoff did. So that was not a crypto issue. That was a fraudster issue. And finally, join a community. I welcome you to join the Advantage Evans FinTech Academy on YouTube, where if you're watching this now, make sure to subscribe and like and share with others who may benefit from this information as well. Surround yourself with like-minded people who can support your learning journey. Someone that is not trying to sell you crypto, but trying to empower you with information so that you can make informed, prudent, and great decisions in this new economy. So today we explore the history of money, its flaws, why crypto is reshaping the financial landscape. And the big takeaway is that money evolves and crypto is its next chapter, a chapter focused on empowerment, transparency, and inclusion. And so your homework, because I wouldn't be a good professor unless I left you with some, this week, reflect on your relationship with money. I also recommend in each episode that you visit coinmarketcap.com, research a crypto of your choice, one that intrigues you, share what you've learned with me on Blue Sky at IPProfEvans, or I'm also on all of the other socials, but I am most active on Blue Sky, so meet me there. If you're a fellow Nubian, I'll see you in Nubia as well. And if this episode resonated with you, please leave a 5-star review. Share it with someone curious about crypto. Together, we are building the future of finance. one episode at a time. So until next time, stay curious, stay confident, and take charge of your financial future. If you're ready and set, let's grow. See you next time.